right, everybody, welcome to Mortgage Mondays. I'm here with my co-host, Jeff Mejia from Obsidian Financial Services. Jeff, if you could please tell everybody a little bit about yourself.
Good afternoon, everybody. Hope you guys are having a great Monday. A little bit about ourselves, like we said, we are a direct lender, not a mortgage lender, not a mortgage broker. We're actually the bank, the end lender. So everything that starts, goes through, and finishes is everything with us. The decision-making, the pre-approval, the commitments, ordering of appraisals, final clearance of conditions, trade CDs, closing packages, money, funding. Everything comes out of our office. So there's no middleman. We're not waiting on another bank unless we decide to do a loan where it's non-delegated, which means we don't underwrite. Then we send it to our back investor. But between 95 to 100% of our loans everything comes in-house from us. So we do everything from the FHA, the VA, the conventional, foreign nationals, you name it. Anything that's out there in the streets, we do.
Okay, great. So Jeff, you work with our team here in Boca Raton. And I want to just tell everybody a little bit about myself. As you probably know, I'm Larry Singh. I am the district manager for Canvas Real Estate in Boca Raton. The reason why we're doing these meetings every week, Jeff, is to discuss different topics in the mortgage industry. And you being an expert in the industry, I wanted to get your opinion and see if you can clarify a couple of things that we're going to be discussing through the topics. This is our first weekly meeting for Mortgage Mondays, so I'm very excited about seeing this progress and move forward. Today we're going to be talking about FHA loans, right? FHA loans being one of the number one products that you as a mortgage lender provide to the general public, right?
Correct.
Okay, so what is an FHA loan? Mr. Mejia, can you explain it to everybody?
Sure. An FHA loan is a federal housing urban development loan. Basically, it is backed by the federal government. So for the end lenders that give the money, or these lenders that buy it on Wall Street when they're publicly traded on mortgage-backed securities, these loans have more insurance than me and my whole household with life. They over-insure these loans. So there's no pitfalls, no risk layers to the lenders because the government is guaranteeing the loan. Obviously, if anybody knows anything about mortgage insurance, FHA carries them. They also carry what is called an MIP upfront, which is a one-time mortgage insurance premium that is financed through the life of the loan. And then you have your MIP, which is basically the monthly mortgage premium that is included in your escrows. FHA mortgages have traditionally been for people with less than perfect credit, with people that don't have the typical 5, 10, 15, or 20% down payment. And it really does help a lot of people become owners of homes in the United States.
So this is traditionally a very good program because like you just touched on, it allows more people the ability to afford and buy a home, right? Because some of the guidelines are a little less stringent than your typical conventional loan where you put down a 20%, right? But just as clarification, on an FHA loan, right? Who do we go to for an FHA loan? Because I know you said that this is a federally backed loan, right? Does that mean that FHA is the lender, or who do we come to you for it?
We're the lender. So you can go two ways, and I'll give you both sides of the equation. You can go to a mortgage broker business where they basically originate the file, they'll get the application, but they submit it to their lenders who they work with or approve with. That lender obviously lends the money, and then that's how the thing comes into fruition. Well, let's go to option B. Option B is there is no mortgage broker. I am the lender. So I underwrite, I approve, I lend, we give them the money, we give them the loan, and then we sell it off on the secondary market to our investors after it closes, typically within 30 to 45 days. But we are the ones that are giving the FHA loan to the prospective buyer.
Okay. So how can for real estate professionals that are out there, and also for the general public, how does the process of getting an FHA loan work? Do you have to come to you? Do you apply through you? Is there an FHA website they go through? How do you go about doing that? Right?
It's no different than if somebody was applying for a conventional, an FHA, a VA. It's pretty much the same process. They're going to come to us.
Okay.
We'll take the application, get the person. Well, we're going to pre-approve first and foremost to make sure we get them financed until we put you guys with the right prospective buyer, not wasting your time as agents showing people properties they shouldn't be looking at. That's
Right.
first and foremost. Once we get them pre-approved and they find a property, obviously you guys send us the contract, and then the process begins where we basically start ordering appraisals, title work, submitting the loan for underwriting approval, ordering appraisals. Once everything comes back, the appraisal comes back, the file comes out of underwriting with an approval. Then we start getting conditions, meeting conditions, clearing conditions, and then ultimately closing.
Right. So a lot of this is just for information purposes, and that's why we're kind of phrasing things the way we are with, trying to educate people through this process, right? And there are a lot of people that don't understand this process. You and I have been in this industry for fairly a long time. Me, not as long as you, especially on the mortgage side. You have been doing this, for a very, very long time. And I want to take some of your expertise and give it out to the general public, right? And I feel like there's not a clear understanding as to if an FHA loan is as good as a conventional loan, because you're starting to see out in the industry, people are saying that, we don't want to have an FHA loan. And I just want your opinion on that from being in the industry for so long.
So I'm glad you bring that up, because I see that a lot. I see a lot of buyers that we have pre-approved or out there currently right now, and they submit offers, and the listing agent says we don't want to take an FHA loan, which is crazy because there's really not that big of a difference. The only difference between an FHA loan and a conventional that would be immediately identifiable is that an FHA loan, if the property doesn't appraise, that appraisal stays on the FHA connection for 6 months with that property. So that's really the only thing, but they get underwritten pretty much the same thing. The only good thing about FHA is that it allows us to take a prospective buyer with income and allow us to expand their buying power, because my debt to income ratios can be more aggressive than to a conventional where it's pretty much a box, 45, 46, 47% back end ratios, where I can go to an FHA to a 56.7 and take that person who would qualify normally for, let's say, a $300,000 conventional. I can take them with the same income, same assets, and expand them to about 350, 365. It gives them more options basically as far as
Right.
buying power.
Right. Which especially in today's market, as what we're starting to see with all this, market surge, it gives them a little bit more flexibility with that, because they may not be able to, with houses staying on the market such a short amount of time. You can go in at a full price offer or something like that, whereas prior to that, you might not be able to. And having options, expanding the options for people, it's a lot better for them at this point right now. So you talked a little bit about the FHA criteria, and you said it gives you a little bit more options. So what can you use an FHA loan for, right? I guess that's what it is. Is it just for your primary residence? Can I buy a second home with it?
No, it's only strictly for primary residence. You can only have one FHA mortgage at the same time out at the same time.
Right.
So you can't go and buy an FHA mortgage, for example, today,
Mm-hmm.
and then 2 years from now say, okay, I've outgrown this property theoretically. I
Right.
want to go ahead and buy another one. I'm going to rent this one out currently because that's what you're typically doing unless you're going to sell it. But if they're going to keep it as a rental income, now use it as an asset, I can't go and give you another FHA mortgage when you have an FHA mortgage on this current subject property now.
So that was one point that I wanted to touch on, and then you also mentioned in as well as the MIP, right?
Correct.
So the MIP is the insurance principal that you have to pay every month. Is that correct?
Correct. That is correct. The private mortgage insurance.
Right. So that insurance is paid off. So how long does the insurance for the mortgage insurance, actually last on an FHA loan? Because I know on a conventional, you can ask to have it removed after a certain period of time, or once you have a certain amount of equity into the property, correct?
Correct. Once for conventional, just to follow up and to add to what you were just mentioning. So when you're in a conventional, at the minute that you can show the lender and demonstrate to them that there is 20% of equity within that home that you're now occupying,
Mm-hmm.
they'll ask you to get typically the homeowner will get an appraisal and send it in to their lender whoever that lender is at the current time.
Mm-hmm.
And once they can verify that the appraisal, that they agree with the values of that appraisal, that MIP or that mortgage insurance premium drops off. They'll drop it off, basically take it off your mortgage.
Mm.
On an FHA, it doesn't work that way. FHA pretty much carries mortgage insurance for the life of the loan. So typically what people will do is if they get into an FHA mortgage today, August 10th, 2020, and let's say in August 11th, 2022, they now know that that property is worth a lot more and there's potentially the likelihood that the 20% of equity exists. What we do with those people is we'll refinance them pretty much at no cost and put them back into a conventional mortgage.
Well, see, that's key, right? When you say at pretty much no cost to them, right? And that's out of pocket cost, right?
Correct. So typically, correct, out of pocket, because the only thing is they'll have to pay for a new appraisal. And typically what we do is at the closing, we credit them back for the appraisal.
Okay. Okay. See, these are good things that you want to know, because no matter where you are in the process, even if for real estate agents and for home buyers, if you have an FHA loan, right, and you believe that you have 20% in it, these are ways to lower your mortgage payment, right? You can potentially go into a much lower mortgage payment, right? So I want to ask you, when we're looking at homes, right, is there a limitation to what FHA can lend, right? A dollar amount wise.
Correct. So very simple. FHA has maximum loan limits depending on the counties, and from 1 to 4 units. So, and all that stuff can be Googled. If you Google max loan limits for Broward County FHA, it'll tell you. Broward, Dade, and Palm Beach are $373,750. That is the max loan that they'll give you.
300. Say that one more time. $373,750. $750. Okay, so that's still if you assume that a typical home in Dade, Broward, and Palm Beach County, right, is roughly between 350 and 375. We can make that assumption, right? It's going to be right around those numbers.
Correct.
Give or take $10,000, right?
Yep.
So if we assume that's majority of the homes out there, which is for us as agents and buyers, that's a typical home, wouldn't you say?
Yes, that is the average.
This is just our opinion on that, right? This is just our opinion. Let me just preface it with that, right? Because typical is based on the person that you're talking to. So what do you think as far as lending goes?
Yeah, I think that the average home price for Broward, Palm Beach are between, $350,000 and $400,000. That's about accurate.
Right. So, and this is just a very lighthearted conversation that is, like I always say, is just to inform people. But I want to give people the opportunity to ask some questions, right? So, Jeff, if you could, we're gonna post it on the description of this little workshop we do at the end of this, your email address and all your contact information. And is it okay that people reach out to you directly to contact you if they have any questions on anything?
I would encourage them to. If you have any questions, concerns, email me, call me, text me. I want your answers to be answered for you. Excuse me, your questions to be answered for you, because that answer might be something that might glue a deal together and put a deal together for you.
So I know FHA has many different programs they can offer, right? So I don't want people to just stick the FHA type of loan into a little box. If you could you please expand a little bit on, the 203, all the different kinds of loan programs, just briefly on some of the different kinds of loan programs they have.
No problem. So you have the regular standard FHA, which is the 3.5% down. Okay. Then you have the 203K FHA, which is basically the renovation loan. That's a loan where if the property needs a kitchen, there are some properties that are gutted out that need some bathroom stuff, anything like that. You can finance that in part of the purchase price of the property, as long as there's comparables to justify the after repair value of what that property is going to be worth. And that's the key. The after repair cost.
See, you bring up a really good point there, because a lot of people don't believe that if the property needs work, that they can actually get a loan. Let's say you use the example of a kitchen. If the property doesn't have a kitchen that's completed, that you can actually get a loan for a property that needs work on through FHA, right? So it takes some of some of the inventory out of play just because of the lack of knowledge that people have with the 203K program, right?
Mm-hmm.
Which does give them the ability up to a certain amount to finance repairs, right?
Correct.
So that opens up a whole other set of options, right? But now here's where I'm going to throw a wrench in it for you, right? Let's say I want to invest in a property. Can I be an investor and use it? Because I know you said it was for a primary residence, but
Only primary.
can't.
Only
Okay.
primary.
All right. Just wanted to clear that up, just in case if it was a little blurry for some people out there. These are for primary residents, right? But now let me ask you this: through the guidelines, can you accept gifts from people?
Yes.
Let's say I'm a first-time home buyer.
Yes. So the FHA, that's one of the great things about FHA, that you actually can get into a property for as low, on a regular FHA loan, for as low as $100, because everything can be gifted. Your closing costs and your down payment can be gifted. And now FHA is one of the things about FHA also is that it allows, not in this market right now, but it does allow for a seller to pay your closing costs if you find that seller. Good luck with that one right now.
That's a tough one right now, right?
That's a tough one right now. You know, they're not there. Those guys aren't standing on the streets right now. But yeah, you can get theoretically gifts. It has to come from an immediate family member, brother, father, mother, brother, and we can figure out how to make somebody to make the gift work. But yes, all funds can be gifted on an FHA.
So you talked about the standard FHA program, right, with 3.5% down. You talked about the 203K program, right? And a lot of people equate that the FHA program is only for first-time home buyers. Can you shed a little bit of light on that for us?
Sure, that's incorrect. Real quick, it's incorrect. Just because you owned a home last year and now you want to buy another one doesn't mean that now you're excluded from the FHA. You can buy it. You can have an FHA mortgage 10 times in your lifetime, as long as it's not, one at the same time that you have an FHA mortgage,
Right.
like I had just touched previously. So if you can have an FHA mortgage today, and I want to sell my house, and I want to go into the next house once I sell this property, yeah, I can have another FHA mortgage.
So you can only have one at a time. Is there a time frame that you have to wait before you can apply for another FHA mortgage?
No, as long as that other FHA mortgage, if it's on
It's
your
paid
credit,
off.
has to be paid off. Correct.
Okay. All right. So now that you have that, right? So why is it that people equate the FHA program to first-time home buyers? Why do you believe that's what it is? I know a lot of people say that the FHA program is used a lot of the time by first-time home buyers, and I wanted to know if, in your opinion, of what you've seen over the years, if that's kind of what kind of ties the two together, and that's why people think that.
I think what happens is a lot of the first-time home buyers typically, they don't have the 5, 10, 15, 20%. That's why they're just now organizing their finances. They're getting on their feet. They're putting everything together. So typically, FHA, when it first came out, was structured for these, that's what they used to call it. And I guess the name just stuck to it. But no, for the most part, when you speak to a prospective buyer, for example, and they have a likelihood to buy a property, but their assets are minimal. Well, we know where they're going to end up. So the FHA, but it doesn't have to be for a first-time home buyer. It's just a name that they gave it, but it can be for a person who's owned homes in the past.
So what about the first-time home buyers? Are there any special discounts or anything like that you can give to them through the FHA program?
Typically, there's no different programs or different specifics that they're going to get because they are a first-time home buyer versus Larry, who just is going to buy his second home with an FHA loan. You guys get the same loan, same rate, same pretty much everything, as long as your credit scores are pretty much within the reason of each other. But no, there's no special program or special rates or special discounts that true first-time home buyer is going to get versus another person who's been a home buyer previously.
And I wanted to make that very clear, because there are programs out there that if you qualify for as a first-time home buyer, that you can apply it to the FHA loan that you get, but it's not the FHA loan. That's a separate program that may work in conjunction with that, right? So I just want everybody to be very clear on that. You know, when you talk about a first-time home buyer program, that may be different than what we're talking about on an FHA 3.5% loan. Okay, so there are specific qualifications that they have to meet to get those additional incentives, right? So I think that people tend to tie those two together, and I just wanted to kind of clarify that for everybody as well.
And I'm glad you said that, because yes, the first time home buyer program, as far as FHA, allows you to get in with that, but it also works in conjunction with like a DPA, down payment assistance programs, that the
Right.
city, the state, the counties offer. So it does allow for that to come in. Okay. To gap, if for example somebody's, depending on the qualifications, let's say for a Coral Springs or Miramar, they'll say, okay, based on your qualifications, you qualify for $30,000, and that $30,000 has to be used to the purchase of your home, and obviously closing costs. You have to basically exhaust all $30,000. You can't just use 25 and say, I'm going to keep 5 to go shopping.
Right. You can't
So I would
furnish
do
the
that.
house with the other 5.
I mean, you can find me at a Gucci store, and I'll just say this is on Broward County.
Well, Jeff, I wanted to thank you for your time. I didn't want to keep you too long. I know you're busy, processing all these loans now.
Man, my pleasure. Always have time for you and Canvas, man. You know that.
So what we're going to do is every Monday, you're going to be able to come back right here and see Jeff and I. We're going to talk about other different programs that has to do with mortgages. We really do appreciate everybody viewing this. And I want you to put any questions that you have, because at the top of next week, we're going to go through some of the questions that you guys may have and address those. So you'll have an outlet to ask Jeff, myself, any questions that you have to do. Again, everybody, thank you for watching Mortgage Mondays. We'll
Thank
see you
you.
next week.